Good evening, everyone. I hope you're all having a wonderful day. It's Chris again here with Castle Capital. We're going to be breaking down the E-mini SP futures contract. And today was a wild one. Another wacky day for the books as we had an outside day down attempt and an outside day up attempt. Both failed miserably. We ended up putting the daily back into a balance. So all that means is we took out the previous day's high. So yesterday's high was 40.25. We took that out today. And then after taking that out and attempting to get into the upper distribution from the trend day down back on the 21st, guess what? We fell and this market decided to roll over. So initially, the way the market looked early on is we were opening up near the highs or above it. We opened with a gap because the overnight was long. Basically, all it was short covering. And I was stating earlier this morning in Paul's Discord room. If you don't know who Paul Asmar and Camelback Trading is, I highly suggest you guys checking them out. I will leave a link in the description below for you guys to check that channel out and maybe join the Camelback Trading room. It's a great community of traders. I highly suggest it. Anyway, we were discussing in the room that all the overnight was so far was short covering and potentially a little bit of momentum buying going into the open. And most people were probably expecting a gap and go type of play. Those have failed miserably. Is anytime we've gapped, we've tend to fill that gap. Out of 31 trading days, we've had 19 attempts at a gap. Only 3 gaps out of the 19 have held. Shout out to Paul for having that stat. But yes, 30 attempts at a gap up, or excuse me, 30 trading days, 19 attempts at a gap, and only 3 gaps have held. So that just goes to show you that majority of the time, if you're trying to go for a gap and go type of play, you're probably going to get hurt. But anyway, the overnight was long initially, and then what happened? Once that overnight short covering and then the short covering in the real RTH session, once that begins to go out the window and those bids begin to stop coming into the market, this market's going to liquidate because there's nothing else holding it up besides that short covering bid, right? And anybody that was getting long up here, obviously, once you start to move lower into the previous day's range, they're going to begin to get out of their positions, and this market will roll over. And that's exactly what occurred in B period, as we had a poor high in B period. All right, we've had back-to-back days of poor highs. We had one up here, and then we had another one up here on the 16th. So we had poor highs on the 16th. We had poor highs on the 17th. And then today we had another poor high on the 23rd. So 3 days we've had poor highs. All that means is demand was shutting off up there. Nobody was wanting to buy above that level. So today's high was 34. Nobody wanted to buy above that level. However, the market was attempting to go up. And so people were not wrong to attempt longs in this position or take a position after the gap filled. But once you took out the low in B period, um, once you took out the low in B period, you get out of that position, right? And then obviously those bids step away from the market, and then this market flushes like we did here in C period. So let me label these. Let me label this stuff for you. But you can see we open up above the single prints, the high day from yesterday, that single print, and we attempted to get back into the upper distribution as well as back into that previous balance area that we had from the previous days and weeks, right? So we attempted to get back in that area, and then we rejected pretty heavily. So those areas went bye-bye, right? That single prints went bye-bye. And then I'm going to leave that there because that's a pretty significant area, that balance low area, or the previous balance low. I'm going to label this differently. This was a previous balance low. That'll be an area to keep in mind, all right? So we had A period and B period attempt to find acceptance in the upper distribution, as well as get back into that previous balance area. We rejected pretty heavily in B period as it took out A's low. So we started one time framing down. And then in C period, we decided to go trend. Uh, we hold single prints in C period. D period opens up. We attempted to fill the set of single prints, but could not because we were inside of the previous day's value. Not a lot going on. Buyers were trying to step in the market, but all it was short covering that was pushing the market up higher. There were no serious buyers, and this thing began to roll over again. In D period, we take out C's low. Uh, we continue to one time frame down. We create another set of single prints in D period. I don't know why I'm doing that, excuse me. Create another set of single prints in D period. E period opens up. We continue to one time frame down. So all one time framing down means is we're taking out a previous time frame's low, right? Each one of these candles are 30-minute time frames, and we're just taking out previous 30-minute time frames low. So we're setting lower lows on the day. And then in F period, we set another lower low on the day and attempt to create another set of single prints in E period. And then finally, things begin to change after we got below the previous day's low, attempting to have an outside day down. We kind of fell. We don't get much extension in F. And then in G period, we begin to roll up. H period fills a set of single prints in E. So sellers are starting to give back some of what they've worked so hard for early on in the morning as they begin to cover their shares that they shorted. And this begins to bring the market up. So you got to respect the short-term traders, right? So anybody that was shorting up here against the high of the day, ultimately their target was the previous day's low and not much more, right? They didn't want to go and attempt to get down into the low of day down here at 63.25, right? They only had their parameters set to the previous day's low, began to cover those shares, and that helps push the market up. And then things begin to change even more so in H period and in I period as that begin to grind up into E or into D single prints. Those sellers that were here are no longer wanting to be here. They begin to cover those shares, providing a bid, and this market begins to move up even higher. And of course, you got momentum buying coming into the market as well. So basically, inventory was absorbed down here and is now being distributed up at higher prices as they find buyers. And market moves up higher, right? So those that were shorting, and then those that were shorting down here that got caught down here are obviously covering those shares now because they've hit their stops. So HI and now in J period, we completely fill those single prints. And then we attempt to dip our toe into the C period single prints. So you had single prints here, right? You had single prints that got filled here. And then you had single prints that got filled down here. So things were starting to change. And you could see that in G, H, and I period as we stopped the one time framing down in G period and then began one time framing up in H and I period. And one time framing up, just like one time framing down, whereas you take out previous time frames low, now you're taking out previous time frames highs. You're setting up higher highs, higher lows. So you see that happen in H period, you see that happen in I period. You could sense once they got above eyes single or got above eyes high that we're going to fill the set of single prints in D period, and then they pushed up even more so, got above D's high, and then we filled the set of single prints in K. After we filled the set of single prints in K, we started to slow down a little bit, and the grind continued up into the close in L and an M period where we finally got back to the open. So as much sell pressure as there was, and a failure at attempt of an outside day down, and all that means is we took out a previous day's high and a previous day's low. Had we closed at the lows or below the previous day low, it would have been successful. But we closed back inside the previous day's inside the previous day's range. And all we've done now is put the daily back into a balance. I took one short or took one short today. I only traded once today, so that's what occurred today. Uh, Basically, in a nutshell, that's exactly what happened. Is we sold off pretty heavily as uh, the bids exited the market, and all it was shorting down to the lows, and then shorts got trapped down here. They began to cover their shares, and it has a grind back up to the highs. And all we end up with is today's high and today's low. Keep in mind, tomorrow we have the PCE number, I believe. So another piece of data that's coming out, and that will have an effect on the market. I will not be here tomorrow. I will not post a video tomorrow. So today will, and I'll probably not be posting for the next several days. I probably won't be back until Wednesday or Thursday next week. However, I will attempt to keep an eye on the market. But let's review my trade that I had in D period. Then we'll go over the larger time frame, uh, mark our destinations, then go over the larger time frames. So I took the short in D period. What made me get short? I seen that we were having pretty good acceleration and volume was picking up in B period once we took out A's low, and then in C period once we took out B's low and the initial balance low. Keep in mind the initial balance is A's low or A's high and B's low, or the first two time frames of the day, high and low. We took that out in C period, so you had an idea that this market would attempt to move lower. All right. So once C period did that and we solidified having a set of single prints, I knew my risk reward. I knew what the trade setup was. So once D period opened up and we began to push into C's low here at 4,000, I began to get short. Actually, I think I got short after the fact. I got short after D period had pulled down a little bit. We weren't quite as far down as we had seemed, but I see that we had another attempt at a single print beginning to form. So I'll show you on the 1 minute chart my entries. So seeing that we were going to be creating another set of single prints late in the morning, I began to short in D period and I was comfortable with my position. I even began to add to that position. See if I can find it here. So I began to short here at 95, added to my position at 94, added to my position at 92, added to my position at 90, or it was actually 91. I don't know why it says 90, but it was 91.50 is where I added my fourth contract. And I had thought about adding even more when we pushed back up at 93, but didn't want to over leverage myself, as you know, I didn't know how much of this day they wanted to really push to the low and get near the day's low. So that was initially going to be my target. I've been trying to do better about holding on to winning trades and even adding to winning trades instead of adding to losing trades and holding on to those. But as we began to break lower, I took my trade off at the 88 level. Took all four of my contracts off for a really nice win. Uh, Ended up on the day 15 points. So I caught 15 points. But however, had I stuck to the trading idea and trusted that in E period we would continue to one time frame down and get potentially see if we got to the day's low, I could have easily moved my stop loss down, moved my stop down, and then let this thing ride the 9 EMA to the downside. Had I done that, I would have caught way more than just the 15 points that I did, as we set low in F period at 74.25. Not saying that I would have caught this whole thing, but I definitely could have had a good opportunity to cut some off at the 83 level and then seen what we would have gotten below the previous day's low and then potentially gotten out some there. Either way, I'm happy with how I traded it, and I will never be upset with taking profits. However, once I seen that this thing decided to push down lower, it did hurt me a little bit. So I've been trying to be better about when I am confident in a trade setup, like when we have a trend day down. to get in the position, add to it as we go down lower, and then let this thing ride it out until the market tells me otherwise to get out. But overall, good day, good week so far, as I've had a pretty successful week, PnL wise and trade wise. I've been able to really hone in on the market. Uh, Got to keep that in mind going forward to not over leverage and not be cocky. All right, got to keep myself in line, um, because that tends to be what happens whenever you get on a streak. You kind of get lax. So I got to keep that in mind going forward. Not to get relaxed. Make sure I stay on my p's and q's, cross my t's and dot my i's. Right. Stick to the trading plan and trade what's in front of me. Try not to have any bias or opinion, um, and get out. Keep the market or keep my losses small instead of adding to losers and letting them run against me. I should have hope when I am right and fear when I am wrong, right? Or however Tom Haggard says it. Anyway, let's go over our destinations here. Let's go ahead and mark those. Let's mark our high a day here in B period 34.25. 34.25 is our high a day. It's also a poor high. So keep in mind that just means nobody wanted to be a buyer above that 34.25 level. There was enough liquidity there for us to roll over and obviously trend down. Tomorrow, all this can be distorted with the PCE coming out at 8:30 Eastern time, that is. 74.25 is our low. 74.25, 39, 74.25 is our low of day. And then that's all we have. We have today's high, today's low. And I'm actually going to label this now. This is our low of day and our balance low, actually. So keep that in mind. That is our low of day and our balance low. And then this is now the high of day and our balance high, because now we are in a 3-day balance. If tomorrow we come out to the downside, the daily will resume back one time frame and down. We take out 40, 50, 6, 25, then the daily will begin the one time frame up. Let's go over the larger time frames. Monthly, same thing as I said yesterday in yesterday's video. Still in a large balance for me. Nasty wick. Wanted to see 41.41 level be accepted as we set new lows on the month going into the end of the month. As we only have tomorrow. Nope, I lied. We've got tomorrow, Monday, and Tuesday. So we got 3 more trading days to see how this month closes out. So far, it's pretty weak. We have attempted to backtest this downward trend line. So we'll see how we respond to that. Let's go into our weekly. Weekly, one time frame and down, 1 week in a row, or 1 week as we broke out of balance. You don't want to see us come back into this balance. However, the weekly is one time frame and down. Then in our daily's been one time frame and down, 2 days in a row, and then today we put ourselves back into a balance. So this was our previous balance high. I'm gonna keep that marked, but I'm gonna mark it a different color just to keep in mind. I'm gonna get rid of this. Get rid of this up here. Go to our actual daily balance setup. Also, you see these highlighted. So this is just showing where price was accumulated or inventory was accumulated here at these prices. And then it got distributed up here at this price. And then inventory obviously got began to liquidate lower and we'll see if we consolidate in another period here. Our new balance low is, what was today's low? 74.25. So 39, 74.25. Balance low. And then our new balance high is here at 56.25. 56.25. If I can type, is our daily balance high now. So we are in a 3-day balance, right? We've held the 50-day moving average 2 days in a row now. We want to see if we find acceptance above it. 2 days doesn't make a market. We'll see how PCE treats us tomorrow. Let me adjust this. I don't like how it's way over there. We'll see how PCE adjusts or either helps us or harms the market tomorrow. How we react to it. Do we stay inside this large range, or do we take it out to the downside, test the 200-day moving average, or take out the upside, and then back test the 20-day moving average? That is yet to be seen. So with that being said, ladies and gentlemen, I'll catch you guys in a few days. Thanks for watching. See you later.